Well, good evening. Trying to get live on YouTube too. Gotta go on YouTube and Twitter and Instagram. Going live all over the world. Live all over the world. Yes, we're going live all over the world. Come on in. Come on in the room. Come on in. Let's talk about what's coming up for the week. Kind of goodness we've got coming on. What happened last week? What did happen last week? We had a lot happened last week because those prices were just going back and forth, back and forth. Looks like everything's trying to pull back though from the week, from the all-time highs that we're hanging out at. Stuff's trying to come back off of all-time highs. Get this set up so we can see what we need to see to a weekly chart. It's 5 o'clock, live at 5. This is Arlissa Pinkleton, educator to trader, live at 5. Let me share my screen so we can start looking at some stuff. Share screen. Share screen. Share screen. Alrighty. This is the SPY chart from last week. Let's go look at SPX, see if that will. It's a weekly chart. So when we have the weekly chart, that means every candle on here is 1 week's worth of data. Obviously, you can tell we are still climbing. We had a little pullback here, but we're still climbing, going up. But we are at resistance. This is my pivots indicator that is showing we are at resistance at 54.51. And this is a weekly chart. When I go to the daily chart, you're going to be able to see how on Thursday, I believe it was, there was a red day on Thursday. Let's see if I can make this a little bigger so we can all see comfortably. There we go. Come on back. Come on. There we go. So we had Thursday, red day, and Friday kind of looked very doji-ish. Didn't really leave us with much. Now, Friday was OPEX day. OPEX was quad witching. Basically, it's the monthly expiration where all the weeklies, the monthlies, the quarterlies expired. We also have bonds expiring. I mean, there's several things. I think it's called quad witching because 4 different things, 4 different equities expire. But you'll see that Friday basically was real uneventful. There was a little bit of upwards and downwards movement, but it wasn't a lot. It basically was a consolidation day on Friday. Did kind of come out to the downside a little bit. So you can see that I'm trying to make this bigger, but it doesn't want to move as fast as I'm moving it. But we do see that there was some price action, but we ended up almost at the same place where we started. Thursday, though, is where we did pull back off of Thursday. This is why you see the resistance. This is why that resistance pivot shows up here, because we did come and pull back off of here. There is a gap here that we need to highlight on our chart. Make sure whatever price action has already happened. Here we go. We do have a gap below us that is going to 54.02 down to 53.75. So about 25, 27 points on that gap that is going to want to be filled. You know, gaps like to be filled. They may not fill immediately, but no, the price will come back for it. Price will definitely come back down for a gap. We see some support in this area around 54.25. There is some support in this area, and the gap will also provide support at the 5400-ish, which 5400 makes sense. That is the place that is like the psychological number. So it does make sense that price, if it comes back down to there, it will stutter a bit before going on back up from there. Okay. All righty, that's what we got on SPX. Looks like coming up this next week, we've got several different FOMC members are going to pop in to have their say during the week. We've got on Monday, FOMC member Waller will speak, and daily at 3 a.m. We won't be in the market at 3 a.m., but we will be in the market at 2 p.m. when Daily speaks. On Tuesday, we've got Bowman. I'm not sure. I guess it's just showing an orange folder, maybe for futures, that will cause some volatility for futures, but won't cause any volatility for the U.S. stock market because 3 in the morning, we won't be in the market. Tuesday, 7 in the morning, we got Bowman speaking. 9 o'clock in the morning before market opens, we got S&P composite HPI. I think this is housing price index is showing up at 9 o'clock on Tuesday, again, before the market opens. But at 10 o'clock, we've got CB Consumer Confidence, Richmond Manufacturing. This is a red folder, the Consumer Confidence, and orange folder on the Richmond Manufacturing. 12 o'clock, FOMC member Cook will speak, and at 2:10, Bowman will speak. Bowman speaking in the morning at 7 o'clock and again at 2:10 on Tuesday. Wednesday, we've got new home sales and crude oil inventories at 10 and 10:30. Orange folder, yellow folder, which really crude oil inventory is an orange folder. Thursday, we've got final GDP quarter over quarter. That always moves the market. That's why it's got a red folder. Unemployment claims, this is all at 8:30, so before the market opens. Core durable goods, orders, durable goods, GDP price index, all that at 8:30. At 10 o'clock, we've got pending home sales. 10:30, natural gas storage. And 4:30, which is when the market is closed, we have bank stress test results. The bank stress test results. That sounds interesting. But why is it happening after the market is closed? That might just be telling. And then on Friday, we have FOMC member Barkin speaking at 6 a.m. Of course, market's not open. Core PCE, 8:30. Is a red folder. 9:45 Chicago PMI, 10 o'clock University of Michigan consumer sentiment stuff, 11 o'clock Fed monetary policy, and 12 noon Bowman is going to speak. So it looks like every day this week we do have a red folder except for Monday. This is an orange folder where the FOMC member will speak at 3 in the morning, so that doesn't, won't have an impact. So tomorrow looks like there's no red folders. Doesn't mean there won't be stuff. It just won't be a red folder type of stuff. All the other days, though, do have a red folder. So we will trade accordingly always. Why do we look at these red folders? Well, we look to see what kinds of data is going to come out that could potentially cause volatility or movement in the market. Which kind of things? We look at those to see what is going to possibly move the market one way or the other. How are people going to react to this information? That's why we look at these folders. I suggest you look at them every morning. We do on our morning call. If you're hanging out, go ahead and like and subscribe to the channel. But we look at them every morning at 8:30. We're here on YouTube every morning at 8:30. Go ahead and look at those. We look at those to see what's happening today. What could possibly cause issues today? Right? Because I'm going through it on a Sunday, and by Wednesday, you will have forgot what I said about Wednesday, but we look at it every morning to make sure that we don't miss anything. Looking here at the earnings for this week, we're definitely wrapping up earnings season. It'll ramp back up. It happens every quarter, but at this point, we don't have that many. We've got Money Hero tomorrow morning before the open. We've got Interpack and Beyond Air tomorrow after close. Tuesday morning, Carnival Cruise Lines. Carnival. Now, Carnival and those are really on their way back. If people are cruising, people are going. Carnival is not back where they were pre-COVID. So I feel like, again, my opinion, I'm not an investment advisor. I'm just talking about some stuff. But I feel like they're going to continue to make their moves. TD Synex and Airship are Tuesday morning before market opens. Tuesday after close, FedEx, which we've been looking at FedEx a little bit, another community I'm in. Progress, and who these people? Green Tree Hospitality Group is there too. Wednesday, before open, we've got Paychecks, General Mills, the cereal people, UniFirst, I think they do uniforms, right? And Daytronics. Never heard of Daytronics, but they're Wednesday before market opens. We've heard of Paychecks, General Mills, and UniFirst. Wednesday after market close, MU. Ooh, what college is MU? No, it can't be Morris Brown. That's MBU. Is there an MU University? Minnesota? I don't know. Anyway, MU is Micron. Let's stick with what you're supposed to be talking about, girl. Micron is Wednesday after the market closes. BlackBerry, which BlackBerry really should have gotten a whole lot more respect on their name. BlackBerry, those were good phones. We used them at GE. They were very secure, but BlackBerry didn't do a very good job of keeping up the trends. Anyway, BlackBerry is Wednesday after close. Levi Strauss is Wednesday after close. AeroVironment, Concentrix, HB Fuller, Miller Knoll, and Jeffries are all Wednesday after market closes. Thursday before the market opens, we've got, what's that, Walgreens Boots? Yep, Walgreens Boots Alliance, WBA. I hope they do okay. They changed the CEO a little while back, and they weren't doing so well. I don't really trade Walgreens Boots, but before they were getting smacked down. McCormick is here. Acuity Brands is here. Simply Good, Apogee, and Lindsay. Those are all Thursday before market opens. Thursday after close, Nike, Accolade, Pinstripes, and American Outdoor Brands. And then Friday, we don't have anybody. Friday, we don't have anybody that's having earnings. I see some comments. Let me go and see what's being said. Hey, Carmen. Hey, Janae. Hey, Lisa. Yeah, listen, my BlackBerry was good stuff. I enjoyed my BlackBerry. I won't complain because they definitely gave them to us for free. Well, at least for free usage at the time. Now it's time to celebrate good times. Come on. This was last week. This was our list from last week. Yes. All the option seller ideas that we put out last week, all 100% profitable. Every one of the trades on this list ended up out of the money. Yes. Right, everyone. So what I do here is I use PeakBot watch list. Use peakbot.com/watch list. And I don't think they're going to allow their watch list to be available to the general public for much longer. But if you're a PeakBot person, which PeakBot is automated trading for sellers, we'll talk more about that in a minute. But I go to the Use PeakBot watch list. On that watch list, they have it broken out in lower risk, moderate risk, and high risk. Lower risk, moderate risk, and high risk. I go to the lower risk area. That's how I found these put credit spreads and the call credit spreads. Those came from the lower risk area. And then the iron condors is the neutral, and these came from actually the moderate. Those came from moderate risk last week. So all of these trades, though, if you jumped on any one of these trades using these strikes, your trade should have come out fine. Now, I did put together a new list for this week. This is our list for this week. I used the same process. I went to the PeakBot watch list, and I looked at the lower risk for put credit spreads, call credit spreads, and I got the iron condors from the moderate risk area. Now, I put a video on my YouTube channel that was about using the alerts to help you, get into the trades and pull in the most premiums at the time that, so you're like maximizing your entry. I'm trying to make sure I say it right. You really want to maximize your entry time, because when you do that, you're going to get more in your premiums. Yeah, thank you, Royal Diadem. Appreciate it. Last week, listen, 100% win rate. Woo-hoo. Toot your own horn, child. Toot your own horn. Toot. Y'all know I have to entertain myself on here. Entertain yourself is what you have to do. Anyway, this is all there. So If credit spreads, I was looking for that YouTube taking a little minute. If you're looking for credit spreads, the training along the bottom of the screen, it's scrolling. Vertical credit spreads is the training that we use to trade these vertical credit spreads. It helps you with how do you enter, how do you exit, how do you select your strikes, yada yada. This training, vertical credit spreads training at educator2trader.com for $47. It is on sale. It is on sale. Who doesn't like a sale? I know I do. I got an email today from Bath and Body Works. I was getting ready to I do the plug-ins around the house, and I was going to replace. I have two of them that need to be replaced, and I went to my bag because I had a big old bag of the plug-in little refillables, and I'm only down to like 4 or 5. I don't know how Bath and Body Works knew that I was almost out, but as soon as I picked up my phone, I get the right. I mean, it was literally like the top. The ad for them, their little sale was on there right away. I was like, now how do it know? How do it know that I'm down at my last 2 or 3 plug-in refills? Anyway, I went through their little list, and for $1.98 each, which is a really good price. I bought all the $1.98 ones because only like 5 or 10 were $1.98 price, but that usually I buy them for 2 and some change. I was like, oh yeah, we getting all these. Now that's the truth, Carmen. That is the truth. Hey, Pierre. I don't know how. Maybe I said it out loud. I was like, I might need to buy some more of these. And next thing I know, it was right up on my screen. So anyway, I ordered me some more. They're gonna be here in a couple of days. Pierre said I caught a beating on Friday, but I'm feeling good about this week. What'd you catch a beating on Friday? What got you on Friday? Friday got a lot of people because folks was looking for it to do some stuff, and all it did was consolidate. Pretty much is all it did. So anyway, we got our list of trades for this week. What I suggest that you do is find a stock, 2 or 3 on here that you really like, and run the play. All right. If you really like 2 or 3, if you want to just do, one contract, go for it. But if you really are somebody who's trading Disney, then hop in on 2 contracts, 3 contracts, 4. If you trust that you're going to select a good strike, which we have strikes here, and you want to look at your own charting, because I always suggest that you chart before you enter. But go ahead and enter and lean in a little bit. Yeah, it was quad witching for sure. So folks did take their profits and close positions and reopen them. I'm a fan, of course, of iron condors, and that's because you get to make money on both sides, the put credit spread and the call credit spread side, and you only put up one collateral. So I'm a fan of iron condors. We're going to look at some of these today. Let's see which one. Y'all got to look at this list and tell me which ones y'all want us to look at. Let me see what I want to look at. HPQ got me last week. It looked like it was going to do some stuff, and it basically sat still. So maybe good buy opportunities this week, Pierre. I don't know. I feel like the ones that the NVIDIA and SPY and Apple and Meta, all those who are pulling back, there might be some more pulling back. I wrote PayPal on my list too. I feel like there might the pullback might continue pulling just a little bit. So be careful. Don't automatically assume that you pull back to a upwards moving place. You could, but you don't want to assume that. Right? I got Disney on my list. I put HPQ, I put PayPal on the list. Okay, I see a couple people say PayPal. And then on the put credit spread list, why don't we go with, y'all want to go with Wells Fargo? Y'all don't be crazy about them banks, but they tend to stay on this list. And Tanya, did we look at Google, Tanya? I think we looked at it last week, but let's look at it. If we want to, we can look at Google again. Yeah, I'm not sure, Pierre. I don't give investment advice. I'm just saying it might be a little more motion in the ocean. Let's go with, I'm going to look at SPY real quick first. But listen, as I always say, I want you to do your own charting, do your own due diligence, as they say, to decide what it is you want to do. right? Decide how you want to trade, because everybody has to be their own CEO of their own portfolio. Okay, this is a gap. Why did I leave that way up there? Oh, that's a weekly gap, which it probably still needs there, but we're going to leave this now. This is SPY. SPY came down off of this high at 547. It went as high as 548 and some change and pulled back. 550 is another one of those psychological numbers. Oh, wait, I'm not even sharing my screen. I'm talking about stuff and y'all can't see it. There we go. I'm there. I'm there. I'm there. Y'all ain't going to be calling me. He ain't even on here to call, I don't guess. He'll be calling me, telling me to you share your screen. Okay, now we can see. We should be able to see now. Okay, so this is SPY up here at the 547.86, like I said, and this went as high as 548, which it makes sense that 550 would provide resistance because it's a psychological number, as I said. And then we have some support really down here in the 541 zone, down here. And then, of course, the top of this gap at 538 is going to also provide some support, right? That's what SPY's got going. Triple Q looks a lot like that. Triple Q, see, looking a little bit like SPY, looking quite SPY-ish. This is resistance here. Pulled back off of it Thursday, had a red day on Friday, kind of looking almost hammerish, but I don't know, would this be a hammer or would that really be like a wide doji? Looking kind of hammerish in my opinion. But it's the top and the bottom here above the candle, above the box seems to be about the same. So that may fall in the doji category, but it did break out going to the downside. It broke out going to the downside. We got some support here at 476, resistance at 486. Give yourself a little bit of room, but the pivot showed 483 as the resistance area. Okay, I'm gonna go with doji because I see it's kind of evenly spaced. Hammers usually have a longer wick down here for it to really be a doji. PayPal is on the Iron Condor list. PayPal is on the Iron Condor list. Let's see what we have. Falling Iron Condor list because it's showing as neutral. Nope, I need this. And I need another one down here. So 59 is the support and 61 shows some resistance. Let me go and find my graphic because it's disappeared. I need to be able to see. Come now. This gap over here has been filled by this candle. Well, part of it was filled by, all of it wasn't filled. Let's go put our gap on here. There was a gap from May 29th to May the 30th. We would have had this gap, but we've had some price action to fill it in some so we can come back off of there to say what hasn't been filled in. And that's what it is. So, PayPal may go back after that gap, may go to try to, oh, no, this price action right here filled it. Okay, this next candle on June the 14th filled that gap. So, nope, that is no longer something that we need to contend with. This wick right here closed us off. But the bottom of this candle, the support 61, it's now resistance where it was support over here. It could potentially act as resistance over here. That's the way it goes. Support is in one place, is resistance in another. Depending on once the price goes through it, it becomes resistance. It's like support / resistance. Okay, let's look to see. Let's look at our, what did we learn the other night? Y'all remember? We learned about broadening formations, where we find the low of a candle and go toward the low of another candle, a lower low. So we went from the low here back in May to the low of June 20th. This low, 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 this broadening formation says even though we have support and resistance that's horizontal, price does tend to go past the zones and go a little bit lower. So we are doing what's called broadening formations that basically say there's room beyond the lower line or beyond the upper line. There could be room. Let's see if I got one from over here. I do. A high from this side goes up to a high over here, and you can stretch it out. And what these formations talk about is that price will run between them. Boom, it bounce, and it'll go up and bounce and come down and bounce, and on its way back to the top. That's what's being said there. Okay, so we do have some resistance at 61, but you said ultimately this will try to go on back up to this broadening formation here. Don't know why this is not opening. How about we just come on? Come on, Cletus. It is opening, but it's opening quite slow. Okay, that's PayPal. So if we're looking at, I'm trying to see the graphic so that way I can tell you what I put on our numbers. What are you doing? I don't know why this doesn't want to open. Okay, here we go. My computer is just working day and night. Here we go. I'll just put it up here. And then when I look at it this time, will Paychex earnings affected? It could. Paychex and PayPal, do they run in the same space? And if there's sympathy plays, then yeah, it very well could. Very well could. 35.5 puts and 37.5 call. Disney, we've got 105 on the call credit spread side. WFC, we've got 56 on the put side. Google, 175 on the put side. And Cisco, 48.5 on the call side. Okay. PayPal still working through gap from August. Yeah, PayPal. It needs life support. PayPal, the gap from August of last year. Let me go back and look at a bigger picture then. August 2023. I don't see a gap from August 2023. August 2023 is here. Royal Diadem, tell me which gap you're talking about. We're still on PayPal, yeah. I can go to the monthly chart. I think the price action has filled any gap I can see at this point. You're talking about PayPal. August 2nd, okay. I'll go back and look. What I can see there doesn't see. Let's go to the daily. From 2023 in August. Come on, fill in. I'm trying to see what you see. August of 2023 would be back here. This gap here. Okay, so this big one is trying to get back up to do this big gap from here. It's got to go back up there. Yep, August the 3rd. I see it. So let's drag this out further to see what we did. So it went up there. It kind of going into it, but it can't seem to get. It's gone up and gone up and gone up some, but now it can't seem to get all the way through it, or it hasn't so far anyway. That's what's left. From 70 to 73 is what's left. Notice how this is right up here at the top of this broadening formation I just charted. Could definitely be going back up there. Let's go try again. It did some here, filled some here. It's filled up pieces of the gaps. No, it's higher. Probably could draw another broadening formation. It will be higher up here. If I wanted to draw another one, let's see. I could go from the top of this to the top of this one, the top of that candle there. Come on, there we go. That would also be another broadening formation. Shows that price can come right on back into there based on the high from January and touching the high in April. Got a little higher mark. So this is what I want you to see when you're charting. Yes, we chart our support and resistance. Oh goodness, I'm not sharing. I'm showing y'all and y'all like, we can't say. Okay. There you go. Sorry about that. So I was saying that I could draw this broadening formation from January of this year to April. And if we extended it out, we're going to also put ourselves right back in the middle of the gap. Notice we've gone higher, right? Every time it's bumped a little bit higher, gone up a little bit higher, gone up a little bit higher. And then now when this goes up, it may go a little higher. All right. I know I got it stretched out a little far. So because I wanted you to be able to see the overall trend of what's going on. So you said it's a seller's gap, which means every time it comes up into it, sellers step in. You come back up into it, sellers step in. Come into it, sellers step in. So you've got a couple of broadening formations here together. So let you know, though, that price wants to bounce between these two. Okay. So PayPal is on the iron condor list, I said, at this point between 58 and 63. On the daily, yes. I've got 63 on the call credit spread side and 58 on the put credit spread side, mostly based on the chart and based on our plus minus number. Let me write us a little note in here. PayPal call credit spread at above 63 and put credit spread, that's at 58. If you follow me on any of my my Facebook channel, my Facebook group, you're in my own personal, you follow me on Facebook, you should be able to see this graphic. If you're in any of our telegrams, you can see this graphic that includes all the different trade ideas for this week. All right, so we looked at PayPal. Let's go look at HPQ. Hewlett Packard. I was thinking Hewlett Packard was going to make some moves last week, and it kind of sat still. She was like, nope, we're going to take our time. We're going to chill here. We're going to chill right here. We've got a gap that needs to be addressed. This is the daily chart we're looking at. Come on. There we go. Notice how it's just been consolidating. Not sure how I thought it was going anywhere, but this looks like it's just been chilling, which means it's a great candidate for the iron condor. I've got 35.5 and 32.5. We're looking here at some support and resistance. Top of this zone looks like 36.8. Current price is at 36.3. I've got 37.5. That's a 7. 37.5 as the call credit spread. And even if you go above this line, This candle here, you're still 37.5, still put you in good place. And if you want to look at support, you're down here at 35.5 is good support there. So HPQ, I gotta wait to look and see what kind of premiums we're talking about. Kind of premiums on HPQ, since it's been kind of resting and languishing, the premiums may not be delicious because when it doesn't do a lot of moving, it doesn't have the volatility to build the premiums up. But if you're going to do iron condor, again, you're going to take money in on both sides. That's always helpful to take money in on both sides. Both. BOF. On both sides. Great, that was HPQ. Let's see what's next on our list. Cisco. We'll look at Cisco next. If you got something you want us to look at, we can look. Put it in the comments so that way I can see. I've got several more off of the credit spreads list, but if there's just something that you know that you're interested in, then let's look at it, okay? I do see a gap on the daily chart. Okay. Between 46.70 and 47 is between, so about a 30-cent gap. It's not, not too big, but it's been kind of come down and gone back up. Cisco is on the call credit spread list, and that's based on it's coming into this resistance, coming into a good, strong resistance zone at 47.52, 47.5. I got us going above that a little bit to the next place. It takes us to the top of this wick even. So the top of this wick is what? The high here is 47.8. Okay, so this one may be a little tricky. Let's put us a broadening formation on here. When I say it might be a little tricky, nope, I want a trend line. It might be a little tricky because we've got a high and a little bit of a higher high. Okay, so now this means that it has already hit this and now will come on back down because the wick did go up to this zone and could turn back around and come on back down. So you got 47.5 is good resistance. We're at the top of the broadening formation, so a move back to the downside is highly likely. Highly likely. Okay, I'm going to put us here. Call credit spread 48.5. If you want to go higher, of course you can, but 48.5 would be potentially a good sell leg. That would be a good sell leg for your credit spreads. 48.5, 49.5. If you want to make it a one spread, of course you can widen the spread. When you widen the spread, you can take in more premiums. You also leverage more capital. So just know if you widen the spread, you leverage a little bit more in capital. Okay. Y'all good so far? Make sure you like and subscribe. Click the notification bell. Make sure that you put on your schedule that you're going to be hanging out with us every morning on YouTube at 8:30. YouTube, Facebook, Instagram, Twitter. I do all at that same time. So if you're going to hang out with us, plan to hang out with us at 8:30 each morning where I go through what I'm anticipating for the day, do some charting ideas, look at, trades if folks got questions on different trades to see what's going on for the day. And then we, get ready. We're off the call before the market opens so that way everybody can focus on their trades. Once the bell goes ding, 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 then they're ready. Once they go ding, 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 they're ready. All right. So this is Disney. Disney's on the move. The mouse is on the move. Y'all know I live in Florida. I don't think I've been to Disney more than twice maybe 3 times in my life. Now we go to the Disney area. There's lots to do around Disney, but I don't really do Disney. I like adventure parks and fun stuff like that. So I haven't been to Disney, Walt Disney World. It is here. I haven't been there in a very, very long time. Okay. This is Disney. Let's see, we got a gap here underneath us. At the top of this gap is 100, and the bottom of this gap is almost 199.97. So the top of the gap is 100.40, and the bottom is right at 100. So that's not a big gap, but doesn't mean price won't try to come back for it. But it's going the other direction right now. Going the other direction. Now let's put us a little line here because the top of the gap will provide support. Okay. But if we're looking at resistance, our resistance is going to be, this is our first one at 102.70. There's another one up and then down. This probably would move to here. No, there we go. I want to move it. I want to move it. Move it. Okay, so Disney is on the call credit spread list. Ooh, but now this is feeling kind of put credit spreaded-ish. What do y'all think? Disney's on the call credit spread list, but it's feeling real put credit spread. But I think the reason it's there is because of these strong rejections, the strong rejection at the 102 price point. At the 102's got a strong rejection. Maybe why it is showing as a call credit spread. And then we're going to put our little line on here for our broadening formation in short term. I'm wondering something. How that went right on through there, and it'll potentially pull right back in. You got the resistance up here at 102. I have 105 as our call credit spread, which is above all three of these. Above this, and this is the 105. And that's because of the plus minus number. Current price is 102. Plus minus number, or the implied volatility, puts us at call credit spread at above 105, 106. Okay. Anybody trade Disney? Who trades Disney here? Anybody trade Disney? No? Okay, well, that was a Disney. Now let's go look at some banks. Wells Fargo. Wells Fargo is on the list. The gaps always catch my eye. This closed here. So I need that again. The candle closed here, and then it opened at the top, but then we've got to take into account the top of the wick. Okay, this is the gap we're looking at that is going to potentially need to be filled. But if we're looking at resistance, okay, we've got 59. That's not what I wanted. Thank you, but that's not what I wanted, sir. I wanted a horizontal line. So I can put that one here at 59.04. But if we want to draw our trend line, that's not really a trend line. It's called a broadening formation because it's not really a trend line. We can go from a high to a higher high. Shows that there may be some movement that's wanted there. Now, when you're drawing the bottom ones, or several of them, you can draw, again, multiple. We've got a low and a lower low. If we're looking at these two. But you also have a low and lower low down here. This makes it this one makes it a very steep curve if you want to go with this one here. You would go from, I don't really like that one. Really would go from this low, but there's no lower low right there. You could go from low to low, low to low. So there you could draw trend lines, you can draw support and resistance lines until you're blue. But the whole point is you need to understand that the support and resistance, though it can be a straight horizontal, it can also be an incline, right? So when we're looking at Wells Fargo is on the put credit spread list. And the reason it gets on this list is because of the trend. So it shows up, Peakbot does the 67-day EMA, which means they take 67 days worth of data and run an EMA on it. And that determines whether the trend for that stock is bearish, bullish, or neutral. So when I say it's on the put credit spread list, it's because the watch list has it on the bullish list. It's on the bullish list. So when I say it's, go for put credit spreads because it's showing up as bullish. Okay, let me put a support down here. Support being at 56.97. I've got Wells Fargo with a put credit spread at 55.56. Put credit spread 55.56. Okay. I do see that you could potentially do a call credit spread as well because you've got good resistance up here. But you just on the list, you only have one of them on the list. If you decide you want to go to the other side, which I'm always a fan of going to the other side. Take me to the other side of town. Yep, I'm always about that. Going to the other side. So a call credit spread, I would think you want to go up at least 60 at above. It's probably 61, but I'm going to say 60. Current price is at 58 and we're down here at 56, so probably 61. Plus minus number is probably 2. All righty. That's Wells Fargo. Wells Fargo. Last but not least, I see Google. Goog is on my list. Okay, let's see. Got some support at 176. Okay, got another support down at 175 and some changes below the 176. Kind of this whole, the wick brought us down here as well. We've got a gap we can look at. We closed here, went to the open, pulled back off the wick. Gap between 177.72 and 178. Not a big one, but it's still there nonetheless. Resistance at 180.77. 187. Google is on the put credit spreads list at 172 and 172.5, 175. This whole gap here got filled by these wicks, so you don't have to contend with that. Put credit spread 172.5, 175. Okay, so now as you are looking at what stuff I'm doing on the charts, I'm putting on charts, I'm putting on support and resistance, I'm putting on broadening formations. I want you to think about how does this contend with what it is that you want to do on your chart or trades that you want to take. Right. I hope you're looking at the things I'm doing so that way you can see how you can do it on other stocks that you like. And if you're looking for vertical credit spreads, you need to go on over and grab how do we do vertical credit spreads. I want to get in on the 100% win rate. So how do I do that? It's by going over to Educator to Trader and getting the vertical credit spreads training. Okay, that's how you do that. All righty. I didn't see any more stocks show up in my list, so we move forward. I was telling you about just now the vertical credit spreads training. It's coming to the screen, coming to a screen near you. There we are. There we are. What did I say? $47.67. I think I said 47. I believe it's $47. You can go over there and grab you a half price because it's regularly $97. Go grab you access. Access granted is what you can have. You can have access to the training. You go over there and you go grab it and take it. You will have access to it. All right. Let me see. Take us all off. Yep. Remove. So listen, we started the start with the chart training. We started that last week. We have a few folks who are going through the interactive coaching along with the material that they purchased. They're doing interactive coaching. So that way they're getting to push buttons. They're getting to get questions answered. You know, you can buy courses and trainings and then you can't ever go back to the person and say, what do you mean by this? And how do you do that? And what about this? With this particular training, we do have the interactive coaching that went along with it this time. If you decide you'd like to get in on that, you still can, but you got to move quickly. Chartyourway to100k.com. It's I still have the $200 off on it, and you can join up with the crew and you could be going on with the charting. We're basically doing all the stuff with charting. How do you do support, resistance, gaps, trends, broadening formations? How do you do indicators? How do you identify your strikes? What do you do for your strategies? How do you chart for strategies? All the things, all the things. Anything to do with charting, we're including it. It's included in this training. All right. And that is all there. That's all there. Okay. I think I'm ready to wrap. And look to make sure I didn't leave anything off. We'll talk about the membership, which we do have, the Educator to Trader membership. We do our morning calls. We have a Telegram group where we all hang out together, much like a Discord, but a little bit different. Everybody got a Discord. I don't have a Discord. I have a Telegram. Discords. When I'm in a Discord, it's so many things. It's like, it feels overwhelming. Anybody else ever feel that happening when you're in a Discord? It's like overwhelming. Too many things to look at. But we have a Telegram group where we are there communicating and all. We have weekly coaching and monthly coaching. And basically, I'm just here to help the folks, to help me too. We help each other. It's a joint community where everybody's helping each other. And we hang out together, $97 a month for all the pieces and the parts. And all the trainings I do, you get to come to those trainings, unless I do something like Chart Your Way to 100K, which means if I have a separate training like that, then it has to be purchased. Otherwise, but the interactive piece of it, you are available and able to join us on that all the way along. Okay, so now we are here every morning. Make sure you like and subscribe. Like I said, we're here every morning at 8:30 on YouTube and all the places that wherever you are with me, we're here every morning. Definitely, if you got some questions about your trading or you want to just see what kind of guidance you need for your strategies or whatever else, send me an email. I'm Arlissa at educator2trader.com, or you can send me an inbox and let's talk about what your situation is. Let's talk about what's going on with you so we can see if I can assist. All right, that's what we're here to do. With the whole objective of all of this is to get us all to master trader levels. And I find that there are a lot of people who are struggling in this space, and many of them don't have to. But one of the reasons why a lot of people are struggling in this space is because people don't know how to chart. And they don't know how to do technical analysis, and they see somebody else as the person's talking and all they hear is wah, 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 wah. Even probably listening to me thinking the same thing. You just talking crazy. I've been on call where people were saying something, and I'm like, what are they saying? I was on calls and I understand a lot of it. And I still was like, what are they talking about? But some of that comes down to just you needing to spend a little time upping your own, upgrading your own knowledge and skills. And we're here to help you do that. All righty. So I'm going to call it a fond farewell. I'm going to tell you, as usual, we always like to stay green. We'd like to get this money. Educator to Trader is here for you. I'm here to assist. I'm here to help. All right. If you want to send me a message, we can talk about whatever's going on with you. If there's some trainings you're looking for, educator2trader.com is where all my trainings are. I'm on Facebook. I'm on YouTube. I'm on TikTok. And I'm on Instagram. Educator to Trader in all the places. Educator to the number 2 trader.com is me. All right. I'll see y'all later. You're welcome. Bye, everyone. Bye-bye.